I have an average person in this class have a very good understanding of what basis period is, of what loss relief is, and of what capital allowance is, right? Is my assumption correct?
It's not correct, sir. I wasn't in the last class.
You should have checked the videos. The reason why
I
we'll make
actually did. The questions were very small. I couldn't zoom it, so I wasn't able to understand it well.
so sorry about that. We would the best thing we can do is to move forward. Hopefully you will get it as we forge ahead in the course of the lecture. But at the same time, just try as much as possible to check. Can you hear me?
Yes, sir, we can hear you.
Just try as much as possible to get the whole gist in the class when you are watching the video. Just try to get the gist, and that will be
Okay.
all. All right, let's move on. So today we'll be looking at determination of adjusted profit. Right, determination of adjusted profit. It's not a new thing, but let's look at it, and uh, possibly we'll be looking at that in relation to computation of common income tax liability. But let's start with adjusted profit. What is the idea of adjusted profits? Hello, can you hear me?
Let's give him time. Let's give him time.
Hello, can you hear me?
Yeah,
Yes,
it's
sir, we
better
can hear
now.
you.
We can hear you now.
All right, so I was talking about adjusted profit. Right, so I was talking about uh, computation of adjusted profit. All right. So what's the concept of adjusted profit? The concept of adjusted profit is very simple. An average accountant deals with many things. For instance, it deals with the concept of IS 8, right? It deals with the concept of IS 8, accounting policy estimates and errors. He deals with IS 16, the PPE, which come about depreciation and all of that. So, and one thing is that those standard, the a few number of them are give management a kind of sense of them deciding, right? A very good example is this depreciation. Depreciation is not universal. What do I mean? An entity A can decide to have assets and then decide to revalue it upward, then tell us it uses 10% on a straight line basis, or gets about many things. And those things you begin to wonder what are even the basis for the assumptions? You really cannot fathom that. Another example is an entity on a periodic basis will tell you there's exchange loss, there's exchange gain, and all of that. But those things are sometimes repetitious. Now, so we now came up with a universal way of computing the profit of an entity that will be different from what an accountant has computed. So the process of computing or adjusting the accounting profit to become useful for tax purposes is what we call adjusted profit. Do you get the gist now? So adjusted profit is just a way of converting the accounting profit to becoming useful for tax purposes. Is anybody with me?
Yes, sir, we are with you, sir.
Do you get the gist?
Sir, what's the difference between the adjusted profit and taxable profit then?
And what?
And taxable profit.
Do you mean total profit, taxable profit? Good.
Tax, yes, taxable profit.
Now, the difference is this. Your adjusted profit is what you get before you deduct capital allowances. The adjusted profit is otherwise referred to as accessible profit, while your taxable profit is the tax base on which profit is computed. Do you understand? That's the difference. So your adjusted profit is what you get before deducting capital allowances. And after you deduct capital allowance, what you get becomes a taxable profit or total profit. But the other name for adjusted profit is accessible profit. The other name for taxable profit is total profit. Does that answer your question?
Yes, sir.
Yeah. So there are 4 things that we have to look at in order to help us adjust for the profit we are talking about. The first is we have to look at the concept of allowable expenses, or better put, let me give you the format. Computation adjusted profit, the format. All right, we have net profit, add disallowable expenses, less non-taxable income, what you get will be here. Then you have adjusted profit. All right. Alternatively, you can have it as this.
Please, the person with that noise in the background should move to please.
I guess, are you sure it's not from my end?
Okay, if it's from your end, then no problem.
Turnover is my neighbor. There's nothing. And sorry, turnover or revenue, right? Less allowable. Sorry, let me start from the add. Add other taxable income less allowable expenses. All right. You have something here. What you then get is referred to as the adjusted profit. Is somebody with me, please?
Yes, we are
Yes,
together.
sir.
Good. Now, it looks like if you are very new to this topic, I've used 4 basic terms now that looks a little bit tedious, right? Or 4 new terms. The first one I've used is 1. Please mute your mic if you are ready. The first one I used is allowable expenses, right? The second one I've used is what? Disallowable expenses. The third one I've used is what? Taxable income. And the fourth one I've used is what? Non-taxable income. Am I alone?
We are
Oh,
with you,
we are
sir.
with you, sir.
Yeah.
We
Good.
are with you.
Now, it means that The next thing I want to do is now to break down each of those items. The examiner will not tell you to list the allowable expenses. He's going to only tell you, give you an illustration that will make you use it. The first thing allowable expenses must pass is what we call the principle of rent. Only reasonable, exclusive, and necessary. That means allowable expenses are those expenses that are only reasonably, exclusive, and necessary for the business. Are you with me?
Yes, sir.
Any question?
Yes, sir.
Any question? Any question? No question, ba? So
No question.
now let's look at what are now examples of these allowable expenses. Number one, we have rent paid for premises. Two, insurance premium, right? Three, we have repairs and maintenance. Please let me tell you now, what is allowable repairs and maintenance? If it becomes renewal, it becomes disallowable. It becomes renewal, it becomes disallowable. Are you with me?
Yes, sir.
The next thing, salaries and wages and other pension that is allowable or that is under the Pension Fund Pension Reform Act 2014, right? Then uh, specific provision for bad debt. Then bad debt written off, right? Are you with me? Are you with me?
Yes, sir.
So those are examples of allowable expenses. Now, if you have anything like renewal is disallowed, any other item that is it is inexhaustible anyway. Another one I can remember now is donations. But donations have laws, right? So let's look at the laws around donation, or let's say the conditions attached to donations. Number one, donations must be to the approved bodies according to Schedule 5 of CETA. That's Common Income Tax Act, right? Another thing is that donations to fund created by the government for the sake of disaster, emergency, and crisis are allowable, but must not exceed 10%. Are you with me? Of the accessible profit. The third one, donations of capital projects to approved educational institutions, tertiary in this case, institution is allowable but must not exceed 15% of the of the accessible profit. Are you feeling it, please? So these are the allowable expenses that we have. Okay, I remember one again. Realized exchange loss. Realized exchange loss. The keyword here is realized exchange loss. Right. Then we have, okay, have I put interest? Interest on loan. Interest on loan is also allowable. Interest on loan is allowable for tax purposes. Can I rub off the board?
Excuse sir.
I can rub off the board?
Excuse sir. You wrote
Wait,
WREN. What does this stand for?
Only reasonably exclusive and necessary.
Sorry?
Only reasonably exclusive and necessary.
Okay. Okay, sir. Thank you.
So this donation, I thought it should not be more than 10%. How is it 50? Is it 15% now?
You saw I gave 10%, I gave 15%. There's difference between 10% and
Oh,
15%.
okay. Sorry.
No problem, I'm not angry. Or was I Ash?
Yes, you were.
Oh, I'm very sorry. Honestly, I
Please
didn't mean to.
explain it better. It belongs with the taxation. I did taxation.
Sorry about that.
Uh,
I didn't mean to be Ash. Sorry about that.
thank
So
you, sir.
honestly, I'm very sorry. Accept my apologies. Can I above the board?
yes, sir.
All right. So let's look at disallowable expenses. Disallowable expenses. Right. Only reasonably exclusive and necessary. Only reasonably exclusive and necessary. Only reasonably exclusive and necessary. Are you there with me?
Sir, excuse me, sir.
Yeah.
You said donations of capital projects to approved educational institutions must not exceed 15% of what?
Of the accessible profit.
Okay, then the last one you said is what? The last thing you claimed there.
Honestly, I forgot. I can't remember the last thing I said. I'm very serious.
Sir,
It's interest on loan. Interest
sir,
on
are
loan.
you,
Yeah, interest on
Realized
loan.
exchange loss.
sir? I thought you said 10%. Are you changing it to 15% now?
No. There are two different things. Donations to fund are approved by the government for the sake of war, natural disaster, crisis, anything whatsoever is 10%. Donations to tertiary education capital project is 15%. So there are two different things. Do you get it now?
Is it
Okay, sir.
realized exchange on loan?
Ah, I did not say
Sorry.
realize exchange on loan. No.
On loan was the last thing.
Interest on loan is different from realized exchange loss. There are two different
Okay.
things. Interest on loan, then realized exchange loss. That's why I was asking if I should clean the board. You said I should clean the board.
I didn't say, sir. Somebody said.
You should have objected now. I would have been patient enough. Now, the salary expenses. The salary expense, the first thing now is just let's use word and opposite, right? So the first thing is it will not pass the principle of REN, right? It will not pass the REN test. Not pass the REN test. And you know the principle of REN is only reasonably exclusive and necessary. Only reasonably exclusive and necessary. So let's look at the types of expenses. The first one, the one we hate most, is what? Depreciation. We hate it. Don't even, anything you see depreciation, you move it immediately. Do you understand? We hate it. The next thing, donations to unapproved bodies is disallowed, right? Number 3, any capital intensive expenditure. Capital intensive expenditure. Are you with me? The next thing is any fund or claim refundable under insurance policy or contracts of indemnity. Number 5, we have loss on disposal of non-current assets. Are you with me?
Yes, sir.
Number 6 now. Any payment to widows, orphans, or charitable organization not approved by the government, or charitable organization not approved by what? Government. Are you with me, please?
Yes, sir.
Let me check what this man is saying. All right. Then we have unrealized exchange loss. We have renewal of long lease, etc. As we solve questions, we'll come across what are the other items. Right.
Excuse sir.
Yes, please.
Can you please explain some of the points? Starting from number 2.
Donations. I explained donation. If it does not meet the first condition I give about donation, then it is disallowed, right? Then any capital intensive project or expenditure, that's anything that is capital in nature, either stamp duties on acquisition of issue of shares, issue costs, purchase of assets, etc. is capital intensive, is disallowed. That means
Okay.
in case in case there is an accident, let's say motor accident, and you incur an expenditure on that vehicle, and the money you spent is actually recoverable under any insurance claim or contract of indemnity, then that becomes disallowable. When you sell a fixed asset, custom duty is also disallowed, provided it's
Okay.
on fixed assets. All right. Any payment to widow orphans, it still boils down to donations that is to unapproved bodies. Then we have unrealized exchange loss. Then we have renewal of long lease. All of those items are disallowed. By the time we start looking at questions, we will get very much more of them. Are we together?
Thank you, sir. Yes, sir.
Can I above the board?
Few
Yes,
minutes,
sir.
sir.
Just a minute.
Few minutes, sir.
I don't know any point to. Please let me rub off the. Once I rub off the board, I don't know any point, honestly. Because what I'm arranging.
You said custom duty is not allowable, Abi?
Yeah, custom duty on
Okay.
fixed assets.
Okay.
Yeah. Alright. As my friend taught story, Please inform me if I can rub off the board now.
Please go ahead.
Are you sure I can go ahead?
Go ahead, sir.
All right. It is disallowed, yeah. I know the reason why you're asking again, but I will not talk about it now. Under Petroleum Industry Act, that's what is getting you confused. But I'm not teaching that now. I'm not teaching that now. Just take it as custom duties on fixed assets is disallowed. So when we get to where it is otherwise stated, or when I want to treat Petroleum Industry Act, then I will teach you the other ones, right? But let's take it as it is now. Can I rub off the board?
Yes, sir. Go ahead. Yes, sir. Go ahead. Yes, sir. Go.
All right. Then the next one we have is not non-taxable income. So what is non-taxable income now? Non-taxable income are those income that one are capital intensive, one capital intensive income, that's capital intensive income. Two, gain on disposal of qualifying capital expenditure. I'm sure everyone in this class knows the meaning of qualifying capital expenditure, right? Yeah?
Can you please not assume?
So just
But I taught you, that's what I'm asking. So it's
give
just like me asking. I'm not assuming. It's what I taught you I'm asking again. I taught you this thing already. What's the name?
Capital allowance.
Capital allowance. So it's under capital allowance.
Assets that have enjoyed depreciation, I think.
No. Qualifying capital expenditure is what you like to refer to as non-current assets in your financial accounting. So the asset that will last for more than 1 year and qualifies for capital allowances.
Okay.
Right. So we have 3.
Sir,
Profit.
please. I have something that is confusing me.
Disposal. Sorry, just a minute. Disposal of investments. All right, please go ahead.
Sir, please, I just want you to quickly, in brief form, let me distinguish between depreciation, capital allowance, and impairment loss.
Okay, you see, depreciation and impairment loss. Let me give you the simple breakdown. Depreciation is under AS 16, basically. And what depreciation is it is a systematic reduction in the value of assets, right? It is just a systematic reduction in the value of assets, trying to scientifically look for a basis to reduce the value of an asset. That's depreciation. So you could say as a result of wear and tear or as a result of usage, and that's why you come up with various methods. You could say some of the year digits, straight line method, reducing balance basis, etc. But one thing you have to take about depreciation is it is the systematic reduction of the value of an asset. Impairment is under IS 36, right? And the idea of impairment loss is that it is a sudden reduction in the value of an asset. A sudden reduction in the value of an asset indicated by the indicators of impairment. You know, you have external indicators and internal indicators, but don't let me go into that. It's indicated by the indicators of impairment. So the depreciation is systematic reduction. Impairment is sudden reduction. Both of them are under financial accounting or reporting, as the case may be, and both of them are disallowed in taxation. Capital allowance is granted in place of depreciation in taxation. So And a replacement for depreciation is what we now call capital allowance. Do you understand now? The person that even asked question has left me alone.
Yes, it's
Voila.
clear.
No voila. I will not be angry. So let's move on.
Angry.
Taxable income, right? So what are taxable income? So taxable income specifically are one, any gain or income in the ordinary course of business, right? Then we have any charge. Are you still with me? Or annuity?
Yes, sir.
You have also dividend, interest, or discount. But we need to look at the complexity of dividend. Because the law provides that withholding tax on dividend shall be the final tax on dividend, right? So those are examples of non-taxable income and taxable income. Any question, please? Any question, please?
Sir, the dividends you took now, can you re-explain it?
That the law provides that the withholding tax on dividend shall be the final tax on dividend. Withholding
So why
tax
is
on
it now among the tax table now?
because withholding tax is tax regardless. Do you get
So you
it?
mean this? So this one is more like withholding tax?
You mean for dividend?
Yes, sir.
Yeah, it's withholding tax. All right, let's look at an illustration before we call it a night for tonight. Okay, or before we look at illustration, let me explain this. Can you see my screen? Hello.
Yes, we can. Yes, sir. We can say it, sir.
Okay. Can I remove the whole screen?
Go ahead, sir.
Computation of corporate income tax liability. Because by the start question, I'm not sure I'm going to end before the stipulated time. So let me just deal with the theory. Now, the first thing you want to note, after determining your adjusted profit, so let's go ahead, let's look at it together. Let's look at the formats because the format will help me explain. All right. So we have net profit, add disallowable expenses, right? Less non-taxable income. What you have here gives you this. Then what you have as your result gives you adjusted slash accessible wait. Oh. Wait, but I have to just see what. Okay, just take it, sorry. So we have adjusted or accessible profit. Right. Right. Less loss relief. Then less capital allowances. You have something here. Less capital allowances. Restricted to two-third of accessible profit. I've explained that. So anything you have limited, then you have total or taxable. I prefer using total anyway. Total profit. Then you have company income tax. Right? Then you have tertiary education tax at 3% of accessible profit. Then total tax liability. Any question?
Education tax, is it not 3%?
By God's grace.
God's grace.
Can you explain that, please?
I just explained 3%.
Restricted to two.
Yes, I will explain everything. I will explain everything you have on the sheet now.
So why is there a pile up after that non-taxable income? Why can't there be a space there?
Which one?
After that less non-taxable income, it seems something was written on top of the other. Why is it like that?
Is the writing, sorry, it's just writing. What I wanted to write is adjusted slash accessible profit. I was having issues writing it. Sorry about that.
Hello, sir.
Yes, ma.
Okay, please. Effective when?
2024 year of assessment. So let me explain many things you have here. First, capital allowance, right? Capital allowance is restricted to type by to two-third of accessible profit apart from manufacturing and agro-allied companies. That's first thing. A capital allowance is restricted to 2/3 of accessible profit, apart from manufacturing and agro-allied companies. Are you with me? That's the first thing. So it means for all companies, capital allowance is restricted to 2/3. But for manufacturing companies, it is not restricted, and for agricultural companies, it is not restricted. But any company that does not fall under any of those two companies will be restricted to 2/3 of accessible profit. Is that clear, please?
No, sir.
No or yes?
No,
Yes.
from my end.
I said that capital allowance is restricted. That means any capital allowance you have, you cannot take more than 2/3 of accessible profit, except where the company is an agro-allied company or a manufacturing company. Yes, ma'am.
Hello, ma'am.
Please, you are using two devices. Try to log out one. You cannot listen to yourself. Next person.
Can you hear me now?
Yes, yes.
Okay, please. I want to know effective when is this 3% of TET?
2024 year of assessment.
2024 year of assessment. Thank you.
Yeah.
Something else.
That's the first thing I want to note, right? That's the first thing to be noted. The second thing to be noted, right? Yeah.
Sorry, sir. Sorry, sir. Hello, sir.
Hello,
Yeah.
sir.
Yes, I wanted to ask a question, sir. Sorry, sir.
Yeah, please go ahead.
When you're talking about the capital allowance, there's a particular pre-assumpted mark as a particular figure in assumption in that capital allowance. Then you say that it's being restricted to 2/3 of the accessible profit. Another assumes figure is also in front. Which one are we taking? Are we using the two, or we're using the restricted?
The word
amount?
restricted means your capital allowance should not be more than. So you are picking the lower of the two.
Okay, we are picking either of the lowest of the two.
Yes, the lowest of the two.
Okay.
All right. So types of
Thank you.
companies. You're welcome. Types of companies. Because you notice that I didn't put a rate in the company income tax, because the type of the company will suggest the rate. So we have three classes, or we have class, basis for determination. Are you with me?
Yes, sir.
And then we have the rates. Where a company is called a small company, we have three types of company. We have small company. How do you know a small company? A small company is a company whose turnover is between 0 to 25 million. Where a company's turnover is between 0 to 25 million, it is a small company. And the rate for determination of company income tax is 0%. Now, the second class of company we have is medium-sized company. A medium-sized company. How do I know a medium-sized company? A medium-sized company is greater than 25 million, but greater, but lower.
Less than.
I said, sorry, lower or less, any English like that, than 100 million. Do you get it? So that's a medium-sized company. And the rate of that tax liability is what? 20%. Then the third type of company is large company. And company whose turnover is greater than 100 million. It's called a large company. And what's the rate? 30%. Is it clear to you, please? Is it clear to you, please?
Yes, sir. Yes, sir.
Yeah.
Please, I have a question.
Okay, question.
Yeah, please go ahead.
This is I have two questions anyway. Let me ask the first one. Maybe for the termination of type of company. Are you looking at their revenue or their profit?
I'm looking at their revenue, their turnover.
Okay. So for the second question is on this tertiary education tax. That you said is 3% of accessible profits. So, but I know it used to be 2.5. So I want to know like from what date we looking at to apply the 3%. And what date are we going to be looking at to apply the 2.5?
2024 year of assessment.
2024 year
Hello, sir. I have a question, sir.
What month?
When do we apply the 2.5, sir?
Anything lower than 2023, 2022, and 2021 is 2.5%.
Out of the
2021 to 2023.
Anything lower than 2021 is 2%. That's 2020, 2019, 2018 downward.
Is 2%.
Yes.
Okay.
From 2021 downward.
Yes.
The 2023 is 2.5. 2024 is 3%.
Yes.
Then anything lower than 2020 is 2%.
Exactly.
Thank you.
Hello, sir. I also have one more question, sir.
Okay, please go ahead.
So,
sir, this non-taxable income, does it have like subsections under it, like the way we have disallowable expenses? Do we have some items that they're under?
Yes,
But you didn't give us that one.
I have listed them before.
No, let me put that.
I listed them before. It's like you missed out on them. Don't worry, we'll soon get back to them.
Hello, sir. 2.5.
Yes.
Does it mean it's just 2022 and 2023 that is applicable?
I'm not getting you again. I'm lost.
The 2.5 on the TET, does that mean it's only applicable for 2022 and 2023?
22, 23 of assessment. 21, 22, and 23 of assessment.
Okay, from 2021 to 3.
Yeah.
Okay, for the types of companies to the basis for determination, when does this take effect?
In your exam, you use it.
Or any year given?
Yes, you use it.
Okay, thank you.
You're welcome.
Hello, sir. Please have a question.
Yeah, please go ahead. In your exam, you use it.
Regarding capital allowance.
Regarding what?
The capital allowance.
Yeah.
To choose between the restricted one or the actual capital allowance given to us. Please, a clarity. Because I need a clarity.
You did what?
Please, a clarity on one restricted to third.
You are picking the lower of the two. You are picking the lower of the actual capital allowance and the restriction. Anyone that is lower is what you pick. Don't worry, by the time we start solving questions, you'll get it better. Now it looks a little bit abstract.
All right.
Don't worry.
All right.
Can I still ask more question?
Yes, please go ahead.
Okay, please. In case we have a question in the exam and the turnover is not given, so how do we identify whether it's small or medium company?
30% is the standard rate.
Okay. So once the turnover is not given,
Yeah, 30% is the standard rate. But for this your level, I don't expect the examiner to be a person who will not give you revenue.
Okay, thank you.
You're welcome. So let's move on. Can I above the board?
Sir.
Can I above the board?
Yes, sir. Go ahead. Yes, sir.
Now, what I just explained is called normal basis of assessment. What I just did now, what I illustrated to you is normal basis of assessment. Are you with me? Now, let's then look at minimum tax provision. Minimum tax provision. Minimum tax provision. Now, minimum tax provision will apply where one, the normal assessment results into a loss, or the normal taxable profit, there is no loss, there's no profit. Let me just put it that way. Where there's no profit, or where the minimum tax is higher than the normal company income tax computed. Are you with me, please?
Yes, we are.
Any question? Now, the idea of minimum tax, now we have companies exempted from minimum tax. Companies. Exempted from minimum tax. Is somebody with me, please?
Yes, sir.
Number one, the first one is small companies. Small companies are exempted from minimum tax. And you know who small companies are, right? Companies whose turnover is less than 25 million. Is that correct?
Okay.
Number two, agro-allied companies. Companies who do agro-allied. And three, companies in the first 4 years of commencement. So these are the three companies exempted from minimum tax. Any question?
Excuse sir.
Okay, go ahead.
First one, can you hear me?
Yeah, please go ahead.
Where there is no profit, is it possible? How is
Yes,
it?
I didn't get you.
This number one, minimum tax provision.
Yes.
Number one, where there is no profit.
I didn't get you honestly. You are not audible. I'm not getting what you are saying.
I said this number one.
What's
Minimum
the
tax provision.
Yeah, what's the issue with it?
Yes, sir. How is it applicable? I didn't get your explanation.
Okay, I was saying minimum tax. Why should you compute minimum tax? Or why do you assess a company to tax based on minimum tax provision? The first is where there's no profit. That's where there's no total profit. Or where the business operations results to a loss. You will still compute minimum tax regardless. Right?
Okay, not minding if small company.
Where the minimum tax is higher than the normal company income tax liability. All right, let's move on. How do you now compute minimum tax? Minimum tax is computed as 0.5%
of gross turnover less franked investment income. 0.5% of turnover less franked investment income. Right? Now, the thing is that they changed it actually. So let me inform you about the change. This becomes effective in 2022 year of assessment. 0.5% became effective in 2022 year of assessment. Right? Became effective 2022 year of assessment. And then we have before 2022 year of assessment, that's for 2020 and 2021 year of assessment, they were using the 0.25% for 2021 and 2020 year YOA. But for 2022 year YOA, you use 0.5% of gross turnover less franked investment income. Right. Any question? Any question?
No question.
I want to ask a question.
Yeah, please go ahead.
Okay, please, can you explain more on frank investment income?
Okay, franked investment income, I was expecting somebody to ask me anyway. So franked investment income is dividend received by a company after deducting withholding tax. Franked investment income is dividend received by a company after deducting withholding tax. Right.
Please explain again, sir.
Is it just dividend, only dividend?
It's actually dividend, interest, and income earned from abroad and abroad through appropriate channel. We have dividend, interest, income earned from abroad and abroad through appropriate channel.
All right, sir.
Yeah, any question?
Thank you.
So, for a company that does not make profit, why should they be taxed again?
They will be taxed based on their turnover. I explained in my loss relief class that whether a company makes profit or loss, it still pays tax regardless. That's why we do loss relief, so that in the next year where you now make profit, you will deduct the last year loss from the profit before determining your tax liability. So the thing is that we can't apply the tax rate on the profit because there is no profit. So in that instance, the person will be assessed to tax based on minimum tax provision. Any question? So in the next class, we'll be looking at computation. Please, I beg you, in the next class, come with your calculator, as that would help. I would like to use whiteboard to illustrate. I don't know if you would prefer that, but regard, I'm not sure if I use this whiteboard. But let's see how it plays out. So please come to your next class with the calculator or with your calculator, so that I'll be able to do one or two things together. Any question, please? Any question, please?
Please, I meant 0.5%.
0.5% took effect from 2022 year of assessment. Finance Act 2022 year of assessment.
Oh, okay. So 2021, 2020 was 0.25.
Yeah. But your exam, I believe the examiner will set 0.5% to be what will be applicable.
Oh, okay. Thank you very much.
Hello, sir.
Yeah.
Please, if in the question they gave us or they said that the frank investments, maybe they say frank investment income, right? They now write gross, which means dividend has not been removed. That's what it means.
I didn't get your question.
Like if they give us a question and they say that the dividend has not been paid and maybe they gave us gross, maybe bank investment income, they now wrote gross, that means it has not been paid, right? So do we net off the
It still
10%?
it still doesn't have any effect on your computation because the idea is dividend must be deducted before determining withholding tax and before determining the minimum tax.
Minimum tax.
Yeah, so
Okay.
either net or gross, you still deduct it regardless from your gross income.
Okay.
Okay, I have a question.
Yes, go ahead, sir.
Okay, I know you have said it, but I just need to be very clear about it. When the examiner sets the question and put dates, do we use the current? You said you will use the current
The
what
examiner
rates?
is expected to set the current date. That's when you use, but where the examiner is somebody who is not current. The reason why we are giving you the years that are applicable is for you to know what to use in the exam based on the years you are given. So the years you are given determines what you use, basically.
Okay.
That's why we are taking the pain in the class to tell you 0.25 is for 2021, 2020, 0.5 is for 2023, 3% is for this year, and all of that. So you have to be very conversant with all those modalities because the years will inform many of the things you'll be doing in the exam.
Okay, now the last one you wrote, you said 0.25 for 2021 and 2020 and 20. So before then, what was the figure?
Before then, it was quite long. So it's higher of 0.5% of turnover, but that has been scrapped totally. The examiner is not going to set that one. It's long.
Okay.
Yeah. 0.5% of turnover is 0.5%, higher of 0.5% of turnover, 0.5% of net assets, 0.5% of all of those, blah, blah, blah. But it's quite long, so you don't really need that again.
What
I didn't
what
get
you are
you.
saying, 5% of gross turnover less frank investment is it in 2022?
I'm lost in your question.
The 0.5% of gross turnover less frank investment income. Is it from 2022, sir?
From 2022.
To date?
Yeah, till date. It has not changed.
Okay, sir.
Right. Any question? In the absence of question or questions, in the next class, I'll be doing computation. Please make it a date, and I'll be solving past questions basically. Do enjoy the rest of your night.
Thank you very
Thank
much,
you, sir.
And
Thank you
don't
very much,
forget
sir.
to
God
do
bless, sir.
don't forget to
Thank
do
you so much.
Val.
Thank you. God bless.
Thank you.
Thank you.
Bye. Good night, everybody.
Good night.
Good
Yeah, good
night.
night.
Thank you so much, sir. We are grateful, sir. God bless.
Please don't forget to join your SFM class. Yes, like I did record the class.
Yeah.